talk about the IT sector. We have Sandip Agarwal joining us. He's, of course, tracking the sector at Edelweiss, has been the big bull on IT much before, it became the consensus call. Sandip, good morning. Before we talk about the overall sector dynamics, I just wanted your views on this news flow that came from Wipro. Is this likely to be company specific, or is this sort of giving indications of perhaps some more headwinds for the sector? Sandeep, sorry, you'll have to unmute yourself.
No, I think, right now there are some company-specific issues which are coming in some cases. And I think we have to, not take that only into account because there are many factors to it. We don't know the internals of it, why it has been done. But the sector demand perspective doesn't see any challenges. Even and if you see, Wipro sometimes generally preempts things. In the past, we have seen they have stopped dividend for a short period of time when COVID came, while no one else did that. So, Wipro generally takes proactive and very strong steps. So I would not read too much into it.
Okay. Okay. No, so what does it mean then? I mean, others are also going to be doing similar things, so it keeps things on an even keel. That's what you're referring to in terms of attrition and wage costs, etc.
No, so one thing is very clear. See that the attrition is falling very sharply, and it is falling because of startup ecosystem completely drying out, and also now FANGs recruiting less aggressively than earlier. Right now, the only challenge we are facing on the recruitment side is from EPAM. So the situation is not at all as bad as it was in the last reported quarter. Mathematically, obviously, when you do the calculation LTM attrition which this companies report, then one unfavorable quarter going out, coming in, and one favorable going out, it impacts. But otherwise, there is no such problem. I think it is going to be very positive for the sector. Supply side will cool off. That will bring down the pressures which we have seen on the margins because of insane kind of compensations, which has financial interventions which has happened in last 3 to 6 months time.
Sandeep, hi, good morning. Let's talk about the big movers, right? I have to ask you about Tata Elxsi. That stock has found itself a new set of wings. Not that it wasn't doing well already, but are there any fundamental triggers which is driving the stock now? And is the risk reward still favorable for an investor?
See, the question of risk reward is a very interesting one. Now, if you are taking a long-term structural bet of 3 to 5 years, then, everything, all this sector, if you see the tech sector, they have done extremely well because they are compounding stories. There are times when, they could go 20% correction for 3 months, 6 months. There could be some multiple correction and all those things, which we cannot avoid. Coming to Tata Elxsi, the segment in which it operates, that is the ER&D segment, we have to remember that, ER&D has been anticipated to grow at 2.5 times of the IT services outsourcing space for next 10 years, which means that the average CAGR expected for the ER&D space is 14% versus 6% for the IT services, according to one of the NASSCOM reports, and many other reports substantiate that. Which means that, the space in which Tata Elxsi is there itself will grow more than double the growth rate of the IT services space. So they are natural beneficiary. Now, is the stock expensive? Yes, it is extremely expensive. Is it in niche services? Yes, it is in niche services. Is it getting market share? It is getting market share. Will it continue to be expensive than others? Yes, that answer is true. But can it go for time correction of 6 to 12 months? Can it go 20% correction because of multiple correction? Yes, those are very high possibilities. But if someone is taking a 5-10 year bet, then I don't think there is anything to worry. But these are elevated levels for sure.
Okay. Sandeep, do you think the overall correction in large cap IT is over? Do you see, for example, Infosys getting back to all-time highs? And if yes, by when?
So, Anuj, I will tell you this, right? In my view, the way it happened when in June 2020, if you see NASDAQ was making new low and Indian IT index was also making new low. And then in just 6 months time, they all went through the roof. And that time the concern was growth, and this time the concern is margin. Now, why there is a concern of margin is that you are saying that, the attrition will remain high, manpower cost will remain high, and because of that, the margins will be lower. My point is that, this is an impossible equation which everyone is trying to build. On one side, we are saying that demand is going to fall. There is a US recession which is coming. And on the other side, we are saying that, the margins will also fall because manpower will be in high demand. This is not a possible equation. So in my view, the sweet spot for the industry is between 15 to 20% attrition. And I think in next 1 quarter to 2 quarter time, the industry will come in that sweet spot. And you will suddenly see 300 to 400 basis point margin improvement for the industry in just 3 to 4 quarters time. I will not be surprised if it happens earlier than that. And the street will have to upgrade the EPS estimate across the sector for all the companies. And the stocks will again, I think, if not all-time high, because there is rate hike which impacts the multiples, but they will be closer to that number.
All right, Sandeep, we'll leave it there today. Thanks a lot for joining us. Always good